Good morning, it's Jeffrey Cohen, Chicago Quantum. How are you guys? I want to thank all the viewers, all 2 of you, or 10 of you, or 100 of you, or 1,000 of you, or none of you. Today's video is going to be about, where's the money today? Show me the money today, Jeffrey. Where's the money? And how do you find it? How do you find the trades? How do you find the action? Where's the action, Jeffrey? So the first thing I'm going to do is I'm going to pull down the runs that we did yesterday. So clients get these runs, and they get them in the morning before the market opens, which is pretty awesome, actually. So we download it. We actually post it up on Google Drive. Yeah. This morning it was funny. It's like a half hour before market open. A little bit of a late start, I will admit. Drank a lot of coffee, danced a little bit. It was nice. So where's the market today? So we're preparing to download. Let's get the download going. And then we're going to have the data from the runs, right? And so then the next question is, what is it we're supposed to be looking at? Maybe I'll jump right to it because got to be something out there. Morning look, I got 47 tabs that I open every morning. We no longer are watching for memers, by the way. That's just not a thing now. I'd like to watch for memers, but I just decided that's not the play. The play isn't to find other people trying to manipulate us and steal our money. The play is to find stocks that have intrinsic value or to find price movements and patterns that matter. So yesterday we made a video and we called it Big Beta Bullish Bets because starting 15 minutes ago, all the stocks that our model picks were just screaming through the roof, like up 17%, 15% in a day. And then you can see that the market drifted back, it faded out its gains, and it dropped. And the reason is a lot of the data that we saw yesterday was bad data. It said that inflation's high. It said that economic growth is slow. Economic activity is slow. Inventories are rising. Retail sales are struggling. Everything was slow. It wasn't bad, but it wasn't good. There wasn't one piece of good economic news out there. And so then the question becomes, so where are we at today? And so, did it download? Still zipping. There it is. File zipped. Let's open it up. January 9 runs. I got my down run. Boom. And I'm happy to show you guys this stuff. It's actually pretty cool how you use it, right? Like, what's your trading strategy? Are you an options person? Are you a stock person? Are you a short person? Do you like to short? Do you like to play skew or kurtosis? Or do you just want to know what the dog stocks are or the great stocks are, right? And so I'll take the S&P 500. I'll also open up the spreadsheet. Sometimes we use the spreadsheet and we do analysis on it. It's pretty fun. I'm going to move it away, though. So let's take a look. What do we see, right? So we see in the futures that futures are red today. Okay. Dollar's up a little. It's at 103.19, which is actually down. The dollar's down, but it's up a little. 0.4%. Bonds futures are down, which means rates are up. So dollar's up, rates are up, energy's up. Dollar's up, which is bad for stocks. Rates are up, which is bad for stocks. Energy's up, which is good for energy stocks. But in general, it's kind of tough, like trucking. We want to make an investment in a trucking company, and it's hard, right, when diesel's going up again. And so you see that the market it's looking a little shabby. A little shabby this morning. Yesterday it was going through the roof. So, okay, that's cool. What else you got, Jeffrey? Those are your futures. So we look at bonds and we see that we are in an inverted yield curve. And it really wasn't inverted a year ago. I bring this up because you got to see the big picture. You got to hold the big picture, and you realize You could put money away for a month right now with the feds, and you can earn almost 4.5%. You put it away for a year, and you can earn almost 5%. It's like 4.75%. 4.83%. The hell? Yeah, that's a nice high rate of interest with no risk. 6-month money at 4.83. But again, you get out over the 5-year, 10-year, 30-year, and you're pretty much flat at 3.5 to 3.75. Oh, microchip technology. That's a dividend stock from our model. That's a top dividend pick, and it's only yielding 5.25. Right, so you could earn 4.78. USA Compression Partners is also a good dividend payer. Wow, the bond, it's so interesting. The stocks that our model picks over and over again, high dividend stocks, and now they got nice bonds, bond activity. All right, so dividends, bonds kind of put together. That's interesting. So, by the way, if you have a question, go ahead and ask it. Pop a chat. I promise I'll respond as fast as I can, and I'll talk to you about it. Whatever it is you want to ask. So, highs and lows. So, yesterday, bonds got more expensive. Look at that. 52-week highs. 193. 2-to-1 highs to lows, and advancers to decliners is like 4 or 4.5 to 1. That's good. So, yesterday, debt. Debt was your friend. Debt made money. Bonds were a good deal. Okay. World indices look a lot of red there. You see the futures are looking, if anything, a little worse than they looked a minute ago. India's down 1%. Jakarta's down. I love Jakarta. Indonesia. Down 1%. CAC 40's down 0.8. Euronext is down. The Malaysian index is down a little over 0.5%. Again, we love the Malaysian people. They're nice people. Hang Seng is down. The All Ordinaries, ASX is down like 0.25%. The DAX is down. Spain's down. U.S. was up. And so there must be some news, right? Europe's down. Why is Europe down? What's going on? Oh, it's time for investors to be more realistic about downbeat earnings. Coinbase to lay off 20% of workers. Coinbase is an exciting company. And so maybe earnings. So there's a reason why earnings would be lower. There's the Inflation Reduction Act. Corporate alternative minimum tax. There's a 15% corporate alternative minimum tax. That is going to hurt companies like Amazon and others that pay less than 15%. So, okay, people realize that we're going to punish all those big corporates. That's bad. That's bad. That's a lot of tax that's going to be paid. And the truth is, of course they're going to pay it. You have no choice. You want to be a U.S. listed company, you're going to pay your tax, right? But maybe that's not so good if you earn a lot of money. By the way, it's on billion-dollar companies, billion-dollar revenue the current year, or 100 million in profit per year for like the last 3 years. So it's not just large companies. It's anyone that made 100 million or more. And I bet you, if I were to look at my spreadsheet, fact check. Again, this is all about the Inflation Reduction Act's tax provisions, which I actually have on my investor wall as a big issue, because I do believe this is a huge issue. So how many companies have net income over 100 million? These are all the companies that make a profit, all the companies that trade that have any kind of liquidity flexibility. So let's take a look. Currency. Of course, no decimal points. That's silly goose. We're going to throw a conditional highlight, add a rule. Greater than 100 million. This is assuming that our premium market data services provider is providing us the right info, which I believe they are. So our run starts at 2. So we'll subtract 2 and we'll get the number of companies that have $100 million or more of earnings. Now there are 37 companies that just have no earnings data. So we'll subtract 37. That's our coding. If there's an error in the data, we just highlight it as nines, all nines, and we get it out. So there's 1,130. There's 1,100 companies. By the way, that's probably worth a sticker. There are. This is so interesting. There are 1,100 highly liquid, traded every day, past data validation companies listed and headquartered in the U.S. that make 100 million or more per year in profit. Those 1,100 companies will now pay an alternative minimum tax of 15%. And the key is it's tax on stated earnings, not accounting earnings or IRS earnings. That's the big difference. So if I were to now sum up those earnings, I just want to put it in perspective how much money the government's going to raise. Assuming that they did not pay any tax before, it's a big sum. Looks like it's about $2 trillion. Can that be right? Ah, so frustrating. All right. How much money are we talking about here? Keep going. This is annual profit, net income, stated. And you realize, guys, that if your favorite company, your favorite investment, stated in, yeah, it's millions. It's $2.05 trillion. 15% of that is $300 billion. Possibly incremental corporate income tax. Just want you to think about that. That's going to be pulled out of your IRA and your 401ks. This is what it is. I guess the Europeans discovered it first. This is June 10. So I get it. This is like a big thing, right? So, all right, Jeffrey, great. So you just showed me that there's a $300 billion tax raise, up to $300 billion on companies, and that they're probably going to want to try to dampen down their net income. That's interesting, maybe. But I see the Russell's down, but the Russell's actually come right back up. The Russell's not down. The NASDAQ is recovering. This might have just been pre-market jitters. Look at that. Look at that thing creep right back up. Just want you to see it. When the S&P 500 does this, you know that there's games going on in the morning. So why would somebody try to tank the market at 8 in the morning? It's because no one's trading, and you can do it. You can mark the market. So over the last 5 days, we look at CoiFin. You see the market went up yesterday, but then it came back down. Actually, look at that. From the 6th, it's up quite a bit. Over the 5 days, you're up like a point and a half. It's not much. I like to look at this. I like to see what's going on. You look at it over the day, you see that it screamed higher and came down. Where it screamed higher was high beta stocks. High beta stocks with low variance. Our stocks, the Chicago Quantum Net Score stocks, screamed higher. But I got to tell you, Leptokurtic, down for the day. Platykurtic, I don't want to guess. I can tell you that yesterday the Leptokurtic stocks did awful. Did just awful. And we're going to go to Leptokurtic stocks on our website. Go all the way to the bottom. I'm doing some research and I'm publishing the data for you. Our leptokurtic stocks underperformed the market. The market was down 0, basically. And the median of the 24 stocks was down almost 2%. Platykurtic, the Platykurtic did well. High risk. Platykurtic high risk yesterday was up a median of 2.13 versus a flat market. The worst performing stock was down 8%. The best performing stock was up 20%. That was one of our top picks. And so you see it, right? Platykurtic high risk did very well yesterday. Yesterday was a day for risk on. Risk on, crazy risk. By the way, I have no idea why. You have an inverted yield curve and short money is getting more expensive. By the way, short money got really expensive yesterday. Jeffrey, what do you mean by that? What is short money and how did it get expensive yesterday? Well, 1 month treasury bills hit 4.25. Not long ago, they were 4%. Consistently 4%, right there. Up until like the 5th. So in 5 days, including a weekend, we jumped up 1/4. And I think that's Federal Reserve Bank of New York open market operations tightening up liquidity, pulling money out, raising interest rates, right? And so now 1 month money is 4.25. That means CD rates and savings rates are going to go up because this is equivalent to that, to like a money market. So now your banks are going to suffer a little because your banks are going to have to pay that interest. Although if they lend it out, they're lending out at 8, 9, 10%. That's great, but that's tricky. 1-year treasuries actually also went up, although they kind of moderated. They were at 4.8 for a little while, but you see that. They've risen. They were below 4.7. Now they're 4.79. So short money getting more expensive. That's super important for you guys out there because people borrow money to buy stocks. We borrow money to buy stocks in our little account. We borrowed like 125 grand at one point to invest in stocks. And so you pay interest on that. And don't think it's cheap interest. It's not. 10-year treasuries are up, but they're not. They're not. This is just a game. Over the 5 days, your treasuries are down. Your 10-year treasury note at 3.5, 3.6, and your 30-year at 3.7. These were easily over 4% not that long ago. And so you have long interest rates coming down. You have short interest rates coming up. It's a recession flash. Okay. Where are we at with the stocks, Jeff? Where are we? What's going on today? Futures are negative, but they're not that negative. Now it's 0.13. It's an eighth. They're down an eighth. It's nothing. So the other place I like to look, since the markets are opening soon, let's go right into oil and gas. How's oil and gas doing today? Pre-market. And pre-market's actually pretty good these days. Pre-market has been a nice indicator. So Forum Energy Tech is an energy drilling, energy oil field services is down to 5%. They must have had something going on. NGL, process water, produce water. Some of your midstreams are down. Antero Midstream. By the way, really nice dividend on Antero Midstream. It's a nice dividend stock. Matador, actually, they did something with SMLP. They're buying and selling stuff, trying to make some money there. Improving the Permian Basin, Matador. Oil's up. Some of your midstream, some of your pipelines are up a lot, right? Because that long interest rates are down. Long rates are down. 30-year at 3.7. 10-year at 3.6. Of course, you're going to want to invest in a company that pays an 8, 9, 10% dividend. It's going to make your dividends worth more. Okay, so oil and gas, but more appropriate would be the pipelines. Let's look at regional banks. This is just a straight list of regional banks. There's no valuation or filter here. A lot of negatives pre-market on the banks. Not a lot, but some, and some positives. So banks are mixed. Hawaii's up. I don't know why that would be. That might just be something specific to that one bank. So banks are mixed. This wasn't the case yesterday. Yesterday it was like screaming higher. T. Rowe Price is a nice dividend stock. Down 4% this morning. I have no idea why. Carlyle Group, also a nice dividend yield on that one. Blackstone. So some of your dividend stocks are down, even though long interest rates are down. I think it's because short interest rates are up. Maybe nobody's counting on them paying dividends for 10 years. They're thinking more like 1 year. B. Riley is up. Cohen and Cohen, these are garbage companies, garbage stocks. Oh my God. So maybe it's short covering. I don't know. Yesterday was such a different story than today. Today it's just like a crap sandwich. So G3 Apparel Group is a low flyer. It's like a 52-week low kind of stock, and that's down more. Children's Place. Dillard's, closely controlled, closely held stock with the family. Down 2.5%, but that thing just jitters. It jitters because of very low volumes. Grow Generation, one of our favorites in the cannabis sector. It's up to 4, but it's down a little bit. Interesting. Bed Bath & Beyond, right? That's a crash bankruptcy play. Party City is also a bankruptcy play. Maybe they think the government's going to help them. Hydrofarm is also probably a bankruptcy play. They lose money. They're not doing well. Cannabis, and unless they do the Safe Banking Act, these guys can't take a credit card payment or do real bank B2B kind of work. You have to come with cash. Who comes with cash? Oh, I'll take $4 million worth of equipment and here's 50s. No, or hundreds. You don't do that. That's like organized crime stuff. So, but that's who's up, right? Rent-A-Center. Q-Rate Retail, that's a stock that's been in a toilet. So what I'm seeing is downtrodden stocks are up. Downtrodden stocks are up. These are highly depressed stocks in risk of bankruptcy are up today. Okay, that's not helpful. Who's betting on those? Is it just short covering, or is there somebody like with a complex out there? Okay, crypto and miners. So the first top are steel and hard materials. Steel, rock, copper, iron ore. Freeport-McMoRan, the world's largest copper company, I believe, at least in market cap. Vale's up. Rio Tinto's up. ArcelorMittal's up. Steel Dynamics. You see some of the Asian companies. Cleveland Cliffs, Alcoa. Okay. Who's down? It's funny, Hut 8 Mining is up. Oh my God, Bit Digital. These are like your dog dollar stocks in the crypto business. Downtrodden. Downtrodden is what's up. I've actually got a little index on those, but I'm not going to share it with you yet. Give me a call. Say, Jeff, I'd love to see your downtrodden stock index. I got that. You get that with our run. Every day you get the downtroddens. And you get the up stocks. And you get the high volumes, the low volumes. You get the skew. You get the kurtosis stocks. You get all those in a nice list. Emailed to you. Oh, or you can grab it off of Google Drive. It's ready the night before. Do all your analysis. All right, B2B. Interesting. B2B is mixed. Mixed at best. All right, market's down. I don't see much going on. So now the question is, Jeffrey, was there any news? Let's do a quick run through the news. Energy. Wholesale U.S. energy prices were volatile, but actually they look like they're coming up now. So electricity prices are up. Yeah, that's great for crypto. International trade and services, we know, is down. Is actually bad news. We don't like that news. U.S. futures dip on caution over Fed Powell's speech. 9 a.m. Eastern. He's already speaking. Okay. So Powell's speaking right now. Powell is speaking right now. Okay. Great. Wonder what he's saying. By the way, you can still earn 4.6% Synchrony, even though we are not paid by Synchrony. I'm just always amazed at how big those CDs are. All right, Treasury bonds, all trading higher. 13-week at 4.558. That thing was dancing just under 4.5. So here's the thing, guys. Rates are higher. That means stocks are lower. Interest rates are higher across the maturity curve. However, we have a strongly inverted yield curve. Why does that matter? It matters because short money, hot money, hedge fund money, investment money is more expensive. More likely to sit on the sidelines. Long money, pension money, cheaper. So that's good for stocks. But it is rising today, up 5 or 6 basis points. And so that will be bad tomorrow. Okay, interesting. What else we got, Jeff? Show me the money, Jeff. Markets. Insight on markets. Nothing interesting. Bureau of Economic Analysis. You know, it's nice that GDP rose last quarter. That's good. My guess is it's going to rise again. And then Bloomberg TV. We do like Bloomberg TV. I'm going to stick it over there. I'm going to watch it later. Economic releases. No new releases. Monthly retail trade. No trade data. The Treasuries is interesting. So the next upcoming auction is on 3-year money. And that's today. So what do you guys think? 3-year money going to be up? It's hard to know. We'll look. Consumer Price Index, of course, no data. We'll learn more about that. The next release is on the 12th. So that's something important to watch out for. Personal Consumption Index, next release is on 27th. Housing data. Home Value Index. I don't know. That's probably not interesting enough. That's interesting. Ukrainian. So the Russians are doing waves of attacks. It's probably worth looking at. So this is funny. This is wrong. Fed needs independence to fight inflation? No. The Fed is interdependent on Congress for the Federal Reserve Act, for managing the central bank. And if Chair Powell wants to stay in power and with a strong Fed, has to really work with Congress. And now that means has to work with Kevin McCarthy. Powell's probably soiling himself when he thinks about having to work with Kevin McCarthy, because it's a whole different set of priorities than maybe Nancy Pelosi had. And so my guess is he's nervous about that. Should avoid climate policy. Should avoid fiscal policy. Should avoid a lot of policies. That's actually an important one. This one, we might actually tweet this out with some thoughts. Because the Fed is not independent. The Fed has never been independent. They're always interdependent on Congress. It's just so important. All right, your Census Bureau economic indicators are all from November. That's not interesting. Don't care about that. Fear and greed, we're at neutral. Let's see if anything's going on with the COVID. So I do look at the COVID data. I did talk yesterday with the missus about hospital admissions are up over the week. We are now at 45,000. How are we doing? Look at that. It's rising. Why are hospital admissions going up? That's from the 4th. weekly deaths versus weekly deaths are rising again. COVID's not over, people. There's no way it's that much. Weekly deaths are at 2,700. Well, CPI, no update. Total assets for the Federal Reserve. That's interesting because this should be coming down. It was supposed to be coming down. It is coming down, but it's only 8.5. It's not really coming down. So let's look at other factors affecting reserves. Treasury securities sold, which raises money. Interesting because they overnight reverse repo has now come down to 2.2. So there was a lot of extra money on the sidelines. December 30, they pumped a ton of liquidity in the market, which I believe saved our regional banking system because I actually got out of my short like 2 days before. I was shorting a Texas bank. And now I can see the weakness back in the banking sector. I can show you that. Give me a call or send me a direct message or chat me and then let me know. I'll happy to tell you. But this right here was a Fed loosening. It was a quantitative easing of $500 billion, $300 billion. $300 billion. Now that's the money that went back. So if $300 billion went back to the Fed reserves, that then went back as excess reserves into reverse repo, that means it might have been $500-600 billion that was pumped into the market. No one talks about it. That's another thing I should tweet on. That's important. All right, what else? What else? Oh, your fixed rate mortgages are down to 6.15, which is like 6 and a seventh. 6 and 1/7. And that's interesting, right? So your fixed interest rates are coming down. Interest rates are dropping, which is going to be good for housing. Okay, market's open, so maybe we could just watch the market open. It's hard because this data is delayed, so it's not going to give us good data. You kind of have to go to NASDAQ Book Viewer. I do not want you to see my login credentials, so I'm going to do it off screen and then come back. Not that I have anything to hide, but I pay for this, and I'm responsible for the sign-ins. All right, so how's the market going to open today? And we still haven't even looked at any of the data. That data, you kind of have to look at that before pre-market really gets up and going. Look at the spider, we're 387.66. 387.66. Let's see if it changes from that. QQQ. 269.99. See if that changes. And we'll take a quick look at the IWM, which is the Russell. Now there's a stock that I own that I really want to be looking at, but I'm not going to. 177.93. So the Russell's is slightly lower. The QQQ is up. NASDAQ is up. The S&P 500 is up. So you saw that futures were down, but yet the indices are now up. So it always makes you wonder, what's going on? Who's doing this futures game? Look at that. The futures were red, but yet market's up. Okay. Well, it's up since the open. Oh, no. Powell stresses need for Fed's political independence. No. The Fed never has political independence. The Fed does not have and has never had political independence. Come on. The Fed has political interdependence with Congress. Of course it does. Congress regulates the Fed through the Federal Reserve Act, what is it, 1930, and which they keep revising. And so they're scared. They are scared of the changes from new House Speaker Kevin McCarthy. Right? They had the Nancy Pelosi. He is not Nancy Pelosi. They're worried now, right? We're a divided House. And that also has an impact on the ability to get things done. So if the Congress can't do its work, then there's trouble. Crypto, no real change. A little green, but that's not much. Yeah, not much change. I mean, it's funny because it's showing that it's higher, but it's isn't that funny? Look at that. 38.98. Well, here's the deal. I don't like to do that. I just look at the absolute value that's trading real time. It's up a point. QQQ, it's up 2 points. It's almost 1%. The IWM is up less than a point. So interesting, right? The market's moving. So, all right, I want to thank you for watching. I think if you want me to do another video, just let me know. And thanks again. Appreciate it. You guys take care now. Good luck in the markets. Bye-bye.